In this video, guys, we're going to talk about when to hold a trade overnight as a day trader. Stay tuned. Hey guys, warm welcome to you. Thank you so much for joining me. This is the second take I've done on this video, and if I ever release the outtake, it might be X-rated. I just made the most ridiculous mistake filming this, and I'd love to actually keep some of my outtakes because, yeah, they're quite interesting. I think you guys would chuckle. But anyway, that's by the by. As a day trader, so a day trader, your general theme is your intraday trading, right? In and out, in and out, and out, jobbing kind of market moves, looking for supply demand shifts. And to me, there's a couple of definitions or buckets that I'd like to put my day trades in if I'm day trading specifically. One is, hey, it's a quick A to B move that I've spotted. An example of that might be, hey, an opening flush. So I might see, big sell-off at the open, pause, and I might start to then hit the bids looking for a further flush. And my target might be an overnight low, prior day's low, something like that. It's a nice structured A to B trade, very short term, fine. That's one thing, and you've got no reason to hold that overnight at all. Another is, you're still intraday trading, but you're looking for the larger waves intraday. So you're looking for the kind of low to high move, or high to low move, or low back to open, or some of those kind of bigger, broader moves that go over a certain amount of hours. So example might be, let's use that same type of thing, flush at the open, revisit over time just after European close, which is often when we get reversals. I'm talking about indices here. A little dip below the low, and you might say, okay, actually, you know what? I think we could, on the daily chart, we could quite easily put a doji in today. We could quite easily kind of put a pin bar in. And so if I buy this low, I'm kind of betting on the fact that we're going to put a pin bar on the daily. Fine. Now, that might be a day trade for all intents and purposes, and your idea is for this. But then you make the decision as a day trader, do I want to hold it? Am I giving up good opportunity to make incremental gains on this position if I close it just arbitrarily at the close? Now, obviously, there's some commercial considerations here, depending on the instrument you're trading. If you're trading stock, obviously you have no control over the risk whatsoever. When that stock is shut, you've got after hours, of course, and pre-market. When it's shut, that's it. Any news comes out, you're stuck. So you lose control of risk. If you're happy with that, then fine. Futures contracts, they're different. They're closing quarter past, and then they're opening again at 11 o'clock UK time. And so there's a little window of gap, but pretty much 24 hours, apart from that short window of time. So there's that little bit of risk, but if you have a stop in any overnight move, you could probably protect your capital with that type of thing. And obviously currencies are trading 24/5 with no gap anyway. So the question then becomes, if you're happy to take some overnight risk, depending on the instrument you're trading, how do you make the decision whether to do it or not? And there's a couple of things that I kind of look at when I'm taking this trade, and most of the times I didn't really put on here, which I probably should have done, is it's a bigger theme idea that I've got in my mind. So, and that will come from a higher time frame. So I'll be looking at the higher time frame, and I was saying, okay, I think that we've pulled back on this. It's if we dip under here and start to find some support, then this might be a pin bar, or it might be a wick under the low, and actually that would form, and I'll definitely hold for a day to follow through, because the next day might well be green. And if we get a gap up, then I can kind of use that intraday entry and skill set that I've got to spot that supply demand inefficiency at that moment. See if I can get an edge in, see if I can get a decent close, and then hold for a day to play, and then decide, I'm going to come out on that. So it's normally a broader idea anyway, but there's some kind of rules that I tend to look at to see whether I'm going to do that or not. The first one is just never hold a loser. It's just a golden rule for me anyway. If I'm in a trade, now let me just measure this. If you're a swing trader or you have a longer time frame, then by all means you might take a trade and it might draw down for a couple of days before it goes back up. That's different. I'm talking about now if you're a day trader and you're just deciding whether to hold for another day of follow through, not a swing trading plan saying how I'm buying here, I'm prepared to sit through this and my stop's down here. That's different structure, a day trader. So never hold a loser. So if you're in a trade as a day trader and it comes to the closing bell and it's a losing trade, then I just won't hold it. Just don't hold it, because the idea hasn't played out, right? It hasn't played out in that moment in time, and just extending the time frame tends to reduce the quality of the idea, if anything, especially if it's a momentum play or a buy, like anything, to be honest with you, mean reversion momentum. The longer it takes to do it, the more likely you are to be wrong. So unless it's a very specific strategy of buying on the close, which is something else altogether, then I would never hold a loser. So that's a big golden rule. The thing is, have a predetermined, number two, sorry, is have a predetermined profit cushion. So I like to say, okay, and that might not be in dollar amounts, that might be in, hey, I want the price to be, in fact, let me just put these together because these are really kind of two things, because the profit cushions might depend on your size and all this type of stuff. I really want to see a good closing structure. So what I mean is, if I was buying that double bottom, I want to see it closing near to highs or back above the VWAP or something, you know, that exhibits strength or suggests strength if I'm long, obviously if it's a weakness if I'm short. And so, you know, that would, by definition, give me a little bit of a profit cushion to allow for any overnight slippage or risk or kind of wobble around or noise. And also, the structure's right. You know, if that's my thesis of the trade, part one, getting the entry, great, starting to move. Part two, getting a decent close. Now, it makes sense for me to hold that for part three, which is the broader idea of, hey, I'm playing for that wick, I'm playing for a first green candle on the second day, so I should hold it and try to get that first green candle, look for a good opportunity to sell that position on the early drive or whatever it may be. And so if it's playing out, if it's got a good structure to the close, then I'll hold it, as long as it's part of a bigger idea. And I kind of want to emphasize this. If you're just holding it out of hope, then to me it's not really a trade, because you're like, oh well, I hope it goes up tomorrow, I've got a little bit of profit cushion. You know, there's a distinct difference there. If you're like, I've got a profit cushion and I hope it's going to go up, versus I've got a good profit cushion and the structure of the whole market looks good, it looks like it could very well position now for follow through the next day. That's when you hold it, because ultimately why you're doing this is you're saying, okay, if I can get an early entry into what I believe is going to be a strong day for on the long side, for example, then that's why you're structuring that trade now. You're not saying, okay, I'm going to wait until we get the strong close and then I'm going to buy on the open the next day, because you could leave some on the table. So you're saying, okay, I'm going to take an early entry, playing the game of chess, thinking what the next day's candle could be based on the daily chart. If I get that right, then I'm in a very powerful position to be on board that at the beginning of the move, and then I can get incremental gains from that. That's the thinking behind it. It's not a case of, oh, I'll just hold it and see what happens tomorrow. It's more a case of, this is a 1.5 day, 2 day structured play. I happen to be right now. Why would I want to close it? Why don't I wait for some follow through? So guys, that's just kind of my thoughts on it. If you're a day trader, some people think, hey, you've just got to come out all the time intraday, and that's absolutely fine. If you're scalping, if you're kind of in and out based on A to B type trades, or sometimes running them for a little bit longer, absolutely fine. You know, no problem with that whatsoever. But you know, some of you might go, okay, I'm in a position that actually I feel like I could benefit from some extra gap overnight and some follow through the next day, and it'd be nice to be in that position. So, you know, one thing you can do is trim the position to be more comfortable with taking this stuff overnight. If you decide to kind of explore this difference in trading. All right, guys, take care. Thank you so much for your support. Bye bye.